Good evening, friends, and welcome to Channel Candle Shift. I am your host, bringing you all the stock market update for the 10th of February, 2026. Indian equity markets managed to edge higher for the third straight session, but today's trade raised a familiar red flag. Momentum is slowing, and resistance is getting tougher. Despite positive global cues and fresh foreign institutional investor buying, benchmarks struggled to hold higher levels. The rally looked confident at the open, but fizzled out as the session progressed, with the 26,000 mark once again proving to be a psychological wall for the Nifty. The Sensex rose 208 points to close at 84,274, while the Nifty added 68 points to settle at 25,935, ending firmly above the 25,900 level. Over the last three sessions, both indices have gained a little over 1.1%, but here's the catch. Today's gains came with hesitation. Early optimism, mid-session fatigue. Markets opened on a strong footing, supported by FII inflows, upbeat global markets, and optimism around an interim India-US trade deal. Auto stocks led the charge, giving the Nifty its initial thrust. However, once the Nifty approached 26,000, buying dried up. Trading turned range-bound for most of the day, suggesting investors are unwilling to chase prices higher at these levels. Heavyweights like Mahindra and Mahindra, Larsen and Toubro, and ICICI Bank kept the indices afloat, but the absence of aggressive follow-through buying was hard to miss. Broader market joins the party, for now. Unlike previous sessions, mid-caps and small-caps participated, with both indices posting modest gains. Market breadth was clearly positive. Over 2,600 stocks advanced on the BSE, signaling selective risk appetite is still alive. Volatility also cooled off. India VIX dropped over 4%, slipping to 11.67, reflecting short-term comfort, if not outright confidence. But the question remains, is this calm confidence or quiet complacency? Stocks in spotlight results drive sharp moves. BSE shares surged over 6% after the exchange posted a stunning 174% jump in Q3 profit, riding high on robust volumes and operating leverage. ISGEC Heavy Engineering stole the limelight, soaring over 18% after profits jumped nearly 3.5 times, a reminder that capital goods stocks still have pockets of explosive growth. Neilcast, Signpost India and Wakefit Innovations also saw sharp rallies on strong earnings, pointing to renewed interest in quality midcaps with improving margins. On the flip side, Texmaco Rail slipped, Route Mobile declined despite higher profits, and Happiest Minds disappointed as margin pressures weighed on sentiment. Titan shines, consumer story still intact. One of the biggest earnings highlights came from Titan Company, which reported a 61% jump in Q3 profit. Jewelry demand remained strong despite high gold prices, backed by festive buying, weddings, and aggressive exchange schemes. Titan's margins expanded, international business picked up pace, and store additions continued, reinforcing the narrative that India's premium consumption story is far from over. Corporate and IPO watch mixed signals. Finalex Cables jumped after posting double-digit profit growth, while BHEL bagged a massive 2,800 crore rupees order in Odisha, adding strength to its already healthy order book. However, the IPO market told a different story. Both Fractal Analytics and iFinance IPOs saw weak subscriptions, struggling to even cross 20% coverage midway through the issue period, suggesting investors are becoming far more selective in the primary market. The big question tonight: yes, markets are higher. Yes, volatility is low. Yes, FIIs are buying. But with Nifty repeatedly failing near 26,000, earnings reactions turning stock-specific, and IPO appetite weakening, one question is unavoidable: right finger. Is this rally building strength for a breakout, or slowly running out of fuel near the top? That's the market puzzle investors will be watching very closely. That's it for now. Do like the video and subscribe the channel for more such updates. Happy investing.